I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
We're speaking with Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Are people nervous waiting for the U.S. Fed and the Bank of Japan to announce what they plan to do this week?
I sure think they are. You know, tomorrow, Wednesday, is going to be a very big, I think it could be a very significant turning point in the equities market in general. And I talked about it in an article last night saying that this could be the trigger that actually starts a pretty significant landslide in the equities market that might be enough downward pressure to roll the markets over and we see a new bear market start. We'll have to see what the Bank of Japan and what the Fed does on Wednesday with interest rate hikes. I can't see them. To me, it doesn't make sense that they're going to raise rates. It just, if they do, it's probably going to be the catalyst, or it's going to create at least a week or two long sell-off in equities. To me, it doesn't make sense that if they're going to raise rates. But so if they don't raise rates on Wednesday, the markets are set up for very big moves here. The equities market, the S&P 500 more specifically, has been trading in a very bearish pattern. It had a big breakdown about a week and a half ago. It's been trading in a high volume consolidation, which is not good. Lots of selling pressure, lots of selling volume, very little volume on the up days. And it refuses to really bounce and hold up. Every time there's a little bounce on the intraday chart, big volume comes in and steps on it and sells price back down. So, my short-term cycle work shows that today and tomorrow, more specifically Wednesday, happens to be cycle tops on multiple time frames, and it shows a multi-week sell-off in equities, which means that the Fed probably isn't going to raise rates if cycle analysis has anything to do with it, and that we'll probably see the U.S. dollar collapse in value, and we'll probably see commodities start to skyrocket, which is obviously a weaker dollar is very good for precious metals.
Well, would that also be good news for the Canadian dollar?
It would be, yeah. It would be very bullish. It would be very bullish for the Canadian dollar. I could see the Canadian dollar, rallying a cent and a half fairly quickly here on this news. It could be a pretty big game changer. Obviously, crude oil would benefit from a weaker U.S. dollar. So with crude oil up and the U.S. dollar down, that makes for a pretty good scenario for the Canadian dollar value. Will jump up fairly quickly there.
What about this petroleum producers meeting that's going to be held in Algiers? A lot of people are holding out hope that maybe they'll informally agree that maybe we should either freeze or cut back on what we're pumping out right now.
Yeah, I don't know I haven't heard anything about that. I don't really follow that, but crude oil in general, if you look at a lot of the commodities, this kind of gets away from crude oil there, but commodities in general I think they put in a major low over the last year or so. And if you look at some of the big major commodities, crude oil, precious metals, natural gas, coffee, they've all got massive, multi-year basing formations, and they've all formed these cup and handle patterns, which is a very bullish sign. It means the market has sold off and had a big rounding formation bottom as it slowly came back up the other side, and then it's traded sideways in a flag or a channel, creating the handle of that cup. And those patterns are pretty much the strongest patterns you can get, especially on a long-term, year-and-a-half, 2-year basing pattern. These patterns are showing that commodities in general are on the verge of a major rally, and that to me says that the U.S. dollar could be headed significantly lower. So, there's a pretty nasty picture painted in my head of what the U.S. dollar index is going to look like, and eventually we're going to see the dollar just completely collapse, and commodities going to go through the roof, and commodities in general. And there's going to be some great plays. These are huge investment kind of long-term patterns that are forming. They're not something that you just get in, you wait a week or two. These are patterns that take probably 6 months minimum to start moving, and you could be holding on to them for a year or 3 or 4. So some huge patterns moving in commodities, and these would really kind of be hinging around the whole commodity or the currency wars and the U.S. dollar index of how the economy goes and interest rates. So to me, I feel as though the U.S. dollar is going to be devalued in a fairly big way in due time.
Now, of course, that's not going to be an official devaluation. That's just going to be the market making the decision.
Correct. Yeah. Yeah.
What do you think of governments who try to devalue their currency, hoping it's going to increase their trade? It hasn't helped Japan much.
No, the whole manipulation, really, you got to let the markets settle things out. Sure, things may get ugly for a while, but eventually, when everything has time and is able to relieve pressures in whatever area they are, things will naturally stabilize. They always do, but you can't always have good times. You have to accept there's going to be bad times in the economy, bad times in business. And so these people just keep covering up. Japan, been doing it for 20 years or so. It's, they keep doing it, and what are they expecting? It hasn't worked in 20 years. Are they expecting any day now or any decade now it'll start working? It makes no sense to me. They're just covering up, something that is there, and they're just kind of holding it afloat. And it really, the problem is it's beyond the point of almost recovery. If they let it go, things are going to get extremely bad there. So.
And what about this experiment with negative interest rates? I mean, they're digging a hole in both Europe and Japan, a hole perhaps they'll never get out of.
Yeah, it to me, it doesn't make a whole lot of sense. I get their theory behind it, but I don't believe in the theory. I don't think you need to go backwards in interest and squeeze people and forcing people and institutions to do things that they normally wouldn't really do. So that to me is not, that's manipulation, and they're trying to just simply kick the can down the road, hoping and praying some of these crazy ideas work, but it's not going to end pretty. There's no way around it. It's going to eventually end very ugly for a lot of different things in a lot of countries and businesses and individuals. It's just they keep stacking on these easy money policies and accounting rules, and all these things just keep building that, eventually people are going to realize how bad things really are, and things are going to implode, and there's going to be mass unemployment. There's going to be businesses, if they were back on a regular accounting structure that pre-2009, when everything got really bad, they make one accounting change on the books, and now all the businesses look actually pretty darn good. But in reality, they're terrible. They do all these things to cover up the weakness and to make things look better than they are. And it's just a matter of time before they run out of things, or they run out of tricks up their sleeve to do to cover up this stuff, and it'll leak out. The market always has a way of dragging it longer than you ever anticipate. For all we know, all this kind of BS, all these tricks and, ZERP, zero interest rates, all this stuff could drag out for, who knows, a couple more years. You never know how long. When people are cheating, games get dragged out longer than you want, even though they're cheating and it's not right, and the markets can't support it at some point. Cheating does drag out for a while. Eventually, the game breaks, and there's going to be chaos.
People are pointing fingers at Deutsche Bank right now, saying they're doing all kinds of accounting tricks to hide the fact that they're just a house of cards. Yeah,
I think they are too. I've written a couple big reports on what's going on over there, and it's scary. There's the black hole. You don't even want to touch them. Great stock to be shorting. You could short the heck out of it. It's probably going to be one of those banks that goes to eventually zero or a couple bucks. It's at 12.5 right now. It's just one of those banking kind of implosions, it's going to be totally devalued the share price.
And it probably doesn't help that Volkswagen, the biggest company in Germany, has seen its sales fall for the last year. Ever since it was revealed they were fudging their emission numbers.
Yeah, that's pretty bad. Yeah. That's, it's tough because, well, you can't lie to people. If you lie to people, it's, once you've lied to them once, it's very hard to have their trust back. You've kind of lost them. And if you haven't lost them, you definitely don't have their respect, and you definitely, it's going to be harder to squeeze a premium price out of people because they just don't hold you way up high going, you're in the light, you're a beautiful product, solid company, all that stuff. The problem is once you lie to somebody and you break that trust, it's done with them pretty much. And because it's public, it hits the news, everybody gets a taste of it. So it definitely really kills their sales and business.
Well, you have all these banks now being caught fudging people's bank accounts. Wells Fargo, the biggest example, where they created false, accounts, credit cards, debit cards, all kinds of things just to generate, new business accounts. And yet, they were fleecing people when a check came in for your account. Wells Fargo had taken the money out of that account and moved it elsewhere so they could charge you an NSF fee. And I've noticed some other banks are doing that kind of thing. But until a CEO or two gets thrown in jail, they're going to continue to do this, aren't they? Wells Fargo's fine, by the way, amounted to 3 days' profit.
Right, yeah. Crazy. I know, it's terrible. It really is. It's scary, the stuff that's going on out there. And it keeps getting worse and worse. And, it's part of the game. It's free world. Companies, they can all do what they want. There's millions of business owners, and they all have their own code of ethics of what's right and what's wrong and what they think they can get away with. And everybody keeps bending the rules. Nobody wants to lose, so they tweak and fudge and create new stuff to cover up and make things look like it's hunky-dory.
We'll have more with Chris Vermeulen right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, with so little trust in some of these major institutions now, why should anybody want to invest with them if you can't trust them?
That is a good question, yeah. And I think that comes down to, it's going to come down to share price, I think, a lot of it. Because if you can't trust a company and their accounting, especially when it comes to earnings seasons, you're going to get these numbers. Even if they're really good numbers, everybody's going to be going, have they been fudged? Are they actually real numbers? Or, it's just the problem with accounting and companies lying to individuals. It just creates major problems. And the fact that people are covering up all this stuff, like we're seeing record amounts of share buybacks, we're seeing accounting things. We're seeing people cover up all kinds of doing accounting things to make businesses look very strong. These are like the last resorts. When they can't get business and sales, they start finding ways to cut costs and to make the books look much better. And that's you look at the earnings, the PE ratios for the stock market. We're high. We're kind of hitting extremes that we've seen where the market is overdone price wise. 1929, 2000, we are back at these extreme levels, and investors just are totally oblivious to these high evaluations. The U.S. stock market is like the most overvalued stock market, hitting those extremes I just mentioned. And, the market oscillates. It's just going to be a matter of time when everybody's finished playing all their games or it becomes more known that, businesses are suffering as much as they actually are, even though it's completely covered up. Things are going to rotate and roll over. And, I think we're very close to that. I've said that for a few months here, but, the market is putting in a major topping phase, in my opinion, and we tomorrow, Wednesday, will be the day I think we start to see a potential sharp correction in the stock market that could be much bigger than just 5 or 8% drop. It could be the start of a 30 or 40% drop in the equities market.
I know people have been predicting this drop, and this is the time of year as well when we see major corrections to the market. Will people call this a plunge, a drop, a blow up of the market, a correction? Will there be a term for it?
I think I have a feeling it's going to be like a plunge. If you go back all the way back to 2014, all of those big corrections have been plunges. They're like spikes down on the chart. They are just huge. They only last a few days. You're talking 3 to 5 days or 7 days, and they're just massive plunges. You have to be ready, or you blink and you miss them. And that's the way the market's been going. So I think it's going to be another plunge. We're going to see the SP 500 drop back down to test that 1800 mark. Right now it's trading at 2100 and change, so it could drop all the way back down to 1800, which just brings us to the bottom of this topping formation that we've been seeing. And it has to break that before the bear market is technically triggered for large cap stocks like the SP 500 and the Dow. And that's just the top. That's just more or less the tip of the iceberg to the downside. That is just enough to say, okay, now we're in a bear market. Now it's going to start. Expect 8 to 24 months of constant selling with bounces along the way. There's going to be some huge downside. And the way the markets have been moving over the last year and a half, 2 years, these sell-offs typically are plunges. The momentum picks up, and it's like computer systems. Everything kicks in. People are very antsy, very paranoid that the market is going to crash. So people are on the trigger, and it creates these massive plunges in the market. And it's really tough to trade because in one day, the SP 500 could fall 2.5% on one of these plunges. It's really hard to short something when it's oversold. It's moved that much in one day. Meanwhile, the market just, gaps lower the next couple of days each day and sells off the same amount day after day. It's really tough to trade that stuff. You really have to be a momentum trader and understand that when prices do fall, they typically collapse. They drop very quickly. So you kind of have to chase prices to the downside. And it does take some real guts to chase prices to the downside when we have these plunges, because a plunge down the next day could be a massive plunge to the upside, a huge 100% reversal the other direction. So it's really high volatile stuff to trade.
Yeah, you don't know if the elevator you're stepping on is going to go up or down, do you?
No, and that's the problem with these plunges. These aren't like normal market corrections where you see a significant sell-off and a bounce and some consolidation. We see huge percent drops, 2 or 3% drops on the indexes, and then the next day they gap down 1% and they run another 1% or 2 lower that day. The next day they gap down another percent, and they just keep free falling like an elevator, and it's like skipping floors, and it's really hard to want to try and profit from that falling elevator, because at the bottom are some massive springs, and it's falling with so much weight and energy that when it does find a bottom, it bounces straight back up. And if you just happen to say go short the market the next morning, that might be the bounce that it goes straight back up, and in 1 hour, it's recouped all that loss from yesterday, and you could be sitting with a nasty loss. So these plunges are really deadly. It's like a trampoline. It goes straight down, and you don't know when it's going to find stability and bounce and rip to the upside again.
And I guess the central bank's idea was they would be your spotters to keep you from falling off the trampoline. But frankly, we have seen in the past 19 times since central banks were created, we've had major recessions. So they're not that good at spotting you.
No, they're not. And knowing the way the Fed works, they're going to raise rates tomorrow. They're going to create a massive sell-off and the next plunge. Meanwhile, they shouldn't be raising rates, but they probably will, because it's just the way they work. If it doesn't make sense, let's do it. That's kind of their policy.
Chris, thank you so much for chatting with us.
Hey, always a pleasure. Thanks for having me on the show, Jim.
My guest has been Chris Vermeulen, his website, thegoldanoilguy.com. You're listening to HowStreet.com radio. You can find us on YouTube at Talk Digital Network. On Twitter, we're at Talk Digital Net. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.